As usual, though, there's a lot going on across the housing and political landscape, from regional property markets outpacing the metros to early signs that the worst may be over for house builders. Borrowers are keeping their options open as interest rate uncertainty lingers, while commercial property, though riskier, continues to offer stronger yields than residential for those with enough equity to play. Meanwhile, migrant communities are celebrating changes to parent visa schemes. But over in Parliament, tensions appear to be bubbling under or over between Labour and Te Pāti Māori. To the US, and the bromance is well and truly over. The once close bond between Elon Musk and Donald Trump seems to have hit a very, very serious speed bump. Well, joining me now to unpack all of this and more is property marketing analyst, political commentator, Ashley Church. Ash, good afternoon.
Where is the snow and thunder? I'm sitting here bathed in sunshine at the mouth of the Esk Valley in Hawke's Bay. Where is this all happening?
Wow, you missed down deep down south, Ashley. It was. Did you not see it on the news? It was beautiful.
Who watches the news?
Yeah, I know. Look, I do. I've told my listeners I do to put myself through 10 minutes of hell, and then I flick to Netflix or something. But like, it looked like a picture card, perfect postcards, stunning white snow. It was just, but for those in it, of course. Yeah, of course. They're saying, Leah, come on down here and farm, lady, before you sit up there in your tropical Auckland. But actually, the thunder, my gosh, we had over, I think, 3,000 strikes in lightning strikes in Auckland from about 4:30 till about 7 this morning. And one was so loud, it was like directly, how you see the flash and then you can count. There was no flash. It was just boom above our house.
Wow. Well, I'm not sorry I missed that.
Yeah, well, the dog was really happy at 4 a.m. trying to climb into bed with mum and dad. And I said, "You're all right, mate. You're all right." And just as he settles down, boom, we're off again. Oh, man, it's winter, Anyway, that's weird. And in the meantime, you're basking in Hastings glory.
Napier, but yes.
Napier, that's right. Yeah, good on you.
But no, it's glorious. Bit cold, but beautiful. All good. No thunder, no snow.
All right, my friend. Look, we've seen a tiny dip in the nationwide median house value, and some of the big cities are looking a bit flat. So do you think the regions that are still showing growth, like Queenstown and Rotorua, can keep up, or is this just a blip?
Yeah, it's interesting, isn't it? I mean, the gains at the moment are where they are happening are so scratchy that the media reports on them are quibbling over crumbs, basically. So I mean, the report that you're referring to, which comes from Cotality, which is what used to be CoreLogic, refers to a drop in the main centres of 0.1%. So that's Auckland, Wellington, and Christchurch, but some commensurate value growth in Queenstown, Invercargill, Rotorua, New Plymouth, and here in the Hawke's Bay. But the problem is, of course, that it's only such small fractions that it really doesn't mean anything in the bigger scheme of things. And for me, the bigger issue is, when is this market going to shake off its funk that it's been in for the last 4 or 5 years or 4 years and start to pick itself up and take off again? And, that's literally the $1 million question to which nobody knows the answer. This stuff, 2 years ago or 5 years ago, when the market was going gangbusters, you wouldn't even have been talking about this stuff, because you were talking sort of 5 to 7% growth per year, not 0.01% in a quarter. So this stuff, while interesting, is more an indication of more of the same than any real change taking place in the market.
Because it does still feel a bit lost, doesn't it? So many mixed signals, which you just explained. Mortgage rates are coming down, but lots of listings still, and economic softness. They being the days. Are they saying that we could see a 5% growth this year? Is that
There's
What do
a
you say
couple
to
of
that?
commentators. Yeah, there's a couple of banks that said that, and that was probably a reasonable figure at the time. But at the moment, you'd be scratching to see it.
Yeah, I know. I
when you're
know.
looking at those numbers that I just gave you. I mean, look, it might
Mm,
happen, and hope it does, to be honest. But at the moment, it's a strange time. I think the last time I talked to you, I think I said up until about 2020, you could have asked me anything on the property market, and I could have told you within, a very high degree of accuracy, pretty much what was going to happen to the market at any point in time. Not a
yeah.
chance right now. It's a strange period that nobody understands, and all of the normal things that would normally change the psychology of the market, particularly interest rates, just aren't having much of an impact. And the only thing I can put that down to is I think that it got so bad for people and so hard for people for so long that even though things are on the improve, they're going to want to see that improve being there for quite some period of time before they start to venture out and do stuff again. So
Yeah.
in the meantime, it's just more of the same.
Jeez. And you know what's really frustrating, and Ash, as you know, is in the meantime, things stay the same, except the rates go up and water goes up
Yeah.
and power goes up
Yep.
and everything's going up except the price of your house.
Well, that's going to be interesting because we've got local body elections later this year, and I just get the impression that around the country that this is a huge generalisation because there's some good people in local government, but there's a lot of people who just aren't listening. And I think you look at Wellington, for example, where you've got a pretty concerted effort to change that current regime, because I think people have had a gutful of councils just not hearing them when they say things are hard and you need to tighten your belt. But yeah, you're right. Nothing. Look. There is an argument. There will be some people who say, "Hey, this is great. We've got a degree of consistency where things aren't changing too much, except on that stuff like rates and insurance premiums and all that other stuff that you've got no control over."
Crippling. It's crippling.
Yeah.
I don't know if I asked you this last time. Where are the investors? Are people buying investors back?
A little bit.
Yeah.
So a lot of the stuff's anecdotal because there's no register of investors in New Zealand. So you sort of, to get their real sense of what's going on, you kind of got to talk to the banks in terms of their mortgage applications, and they would tell you at the moment that while there is some interest, it's significantly down. And what's compounding that is a lot of the older investors, people that have been around in the market since the 80s. And they didn't necessarily know they were going to do this, but because things have been so hard over the last 2 or 3 years, a lot of them have just said, "Hey, I've had enough. I'm now in my 60s. It's time to cash up and get out and move on." And which is for a lot of them was the point of it. The problem with that is if that's done in large numbers, Leah, or we don't have people entering the market over the next 2 or 3 years, then in 4 or 5 years we have a major looming rental crisis. And remember, I said this because there's unless something changes in that part of the market soon, that's going to be a biggie.
So saying that, actually, so if we look at mum and dad investors, are they also selling up?
Yes, well, that's the people I'm talking about. It's primarily mum and dad.
Not like the big ones, yeah.
Yeah, no, in fact, what's that?
No, my hubby and I, we made the decision yesterday that we're going to sell our rental.
There you go. And when you talk about investors,
hard.
You guys are the vast majority of investors. Most property investors in New Zealand, I think the figure's 1 or 2 rental properties, and it's mum and dad, and it's people who've got a salary or wages in there, and the investment is something on the side for their retirement. And so if you do that, and 50,000 other investors do that over the next couple of years, watch the space. That's quite scary when it comes to what's likely to happen to the rental market.
I just made it too hard, It's too well. We're not talking straight away. We're probably talking next year now, but
sure.
I don't know. But we never, was never on the cards. But it's just, you just got to do the sums and go, nah.
There's a lot of anguish in being an investor, and the reason that people put up with it, the reason that people are prepared to endure it, is because of the capital growth. So they'll put up with rates increases, and they'll put up with maintenance issues and bad tenants and all that other stuff if the property's increasing in value. When you've got all of that stuff and nothing's happened to the property value, why would you do it?
Exactly.
Why would you do it? Yep.
After a couple of tough years, residential construction work looks finally it's ticking back up, Ash. Do you think we've really seen the floor for building activity, or is it too early to say?
Oh, it is too early to say. I see the increase is 2.6% from January to March of this year, so it's relatively modest. But I've got a different view on this to most of the rest of the commentators. So I've always been of the view, I think you and I have talked about this, I've always been of the view that we were oversupplying the market, so that rather than having an undersupply and rather than having a shortage of houses, that we had too many. And compounding or reinforcing that view was the fact that so many developers went under during the downturn over the last 2 or
Yes.
3 years. That's a clear sign to me that there was too many properties being built and there weren't buyers. So my concern is that if we're now going to be saying, okay, let's get back into it and start building again, and all we're doing is compounding a problem that was already there. So I'm very clearly of the view, and I haven't got time today, but there's some pretty clear figures on to indicate that we've built too many houses over the last 20 or 30 years, and that we're at danger of oversupplying the market. And just when it looks like we might have sorted that out, or the market might have sorted it out on its own, here we go again, sending out that same message again. So watch this space.
Let's talk commercial properties. I don't think you and I have ever talked about them that I remember.
There's a good reason for that.
Okay, well, it's good because I want to know, because from what I saw in the story was commercial property offers higher yields than residential, but carries more risk and requires more equity, correct?
Yeah, so I'm not an expert in commercial property. I know the basics. I've got a layman's knowledge. So basically, as I understand it, you go back 20 or 30 years, there used to be a rule of thumb that you said you got a 10% return on your commercial property, which meant if it cost you $1 million, you get $100,000 in rent. Those days are long gone, as I understand it, and so the return now is much lower. It's under 5%, and so. So there's that. The flip side of that, as I understand it, is that it's much more reliable. You've got a commercial lease that goes for a period of time, so you've got some sort of longevity. The tenants are required to do work on the property if they damage it or want to make changes to it. So and you don't have all of the sort of the nonsense that you have with the Residential Tenancies Act that landlords have got to deal with. But in terms of the benefits of that relative to the residential property market, I'd be hard pressed to really be able to give those to you, because there's lots of reasons why people do residential investment. But not the least being that it's, up until recently, traditionally, it's been much easier to borrow from the bank. Because the banks, it's a relatively easy thing to secure against other property. So I don't know how that's tracking at the moment. I suspect that if I was going to mount an argument for investing in commercial, it would be based on the fact, as we said before, that there's not much going on in the residential property market, and so people that want to invest in real estate would be looking at other options, and that would be one of them.
Yeah. All right, Ash, changing gear, let's look at the announcement of the new parent boost. Migrant communities are hailing a new visa which will allow parents of New Zealand citizens and residents to visit multiple times over a 5-year period. Do you think this is purely the government getting their way of getting skilled migrants here? Because Aussie and Canada have this visa and they get a lot of skilled migrants because their families can come with them.
I think that's exactly why they've done it. So obviously the government's looked at the whole skilled migrant category, and it's looking to basically to remove barriers and obstacles to people coming here, as opposed to some of those other places that you just mentioned. And I would imagine that their focus groups and conversations with immigration specialists, they'd be saying to them, well, one of the problems you've got is that people don't come here because they can't bring their family for any period of time. So this will be simply the government's way of saying, let's remove that barrier. This is interesting. So basically they're saying that, and there's some quite substantial criteria, including some health criteria. But if they meet them, then migrants are able to bring over their parents, I think, for a period of up to 5 years, and that can be renewed for another 5 years. They've got to have independent income, which is at least the equivalent of super, or they've got to have enough money put aside to make sure that they're not a burden on the state. But in general terms, I think it's a great idea. If it's going to help them to bring in those skilled migrants, then I see no downside to that. I see the Greens aren't.
Well, I was going to say the Greens always see a downside, Ash, and they've said
that is true.
They've said it will only benefit the wealthy because the parents need to be sponsored.